morning. It is Thursday, the 5th of June. You are tuned in to Trade Live with IG, and the boyo is back from his holiday.
Hey, how are we doing?
Mate, well tanned.
Thank you.
You look relaxed.
It was lovely.
How is Jet 2 holiday?
Yeah, it was very nice. Thank you very much.
Yeah, the old package trip. What was the highlight?
I would say food and drink.
And a lot of it.
Yeah.
Because it's all inclusive, isn't it? So
Exactly,
you kind of have to.
Yeah. I think I broke even though on the old sort of gym run, intake, offtake, etc. But yeah, all good.
So you've weighed yourself and you're still...
Pretty much, yeah, rock steady.
Excellent. Right, good morning, everybody. We've got Elon getting a bit escalating, let's say, his demands to kill the bill. So when do we think that Trump is going to break? Because Elon's already gone. He was, you know, when you're in that rage, you're having an argument with somebody on text message, on WhatsApp. He does it on Twitter to, how many? 50 million followers or whatever. So
probably more.
At some point, Trump is he's not going to stand for this.
Yeah.
So that's going to be interesting. But what else have we got coming up on today's show? Well, overnight action with myself and the big Pee-wee. Then decoding crypto. Look at that. A crypto section. A new crypto section. What's happened there?
Nice.
So that's with Angeline at 8:35. Then Aaron Bright's joining us for investing experiences. And Angeline and Jolie are on at 9:35. So we've got a few things there, but I think, you know, Elon's the one that's really interesting because Tesla sales got hit again in the US auto sales.
Yeah, China and all sorts. And they had a torrid time yesterday, down to what, 330, I think, from, you know, easy 365, 370s.
Some wise person bought the 330 puts as soon as he said it
nice.
on Tuesday for Friday expiry.
Oh, right, nice. Yeah, I mean, I guess there's still time for it to rally a little bit. It's on your level. Oh, right, okay, fair enough.
Yeah. Okay, so let's go into some overnight action because we are going to be talking about intimate wellness. That's right. I've left you on that hook now. Did he say intimate wellness? Pete Ward talking about... We need some romantic music now. What am I talking about?
Yeah,
I am talking about... Yeah, we didn't prep this bit. Should you buy shares in Reckitt Benckiser right now? That's the question that Tempest is asking. Now, of course, Reckitt's has had a really rough few years. 2017, it bought Mead Johnson, the baby formula company, and it's had this huge litigation against it. But they're trying to clean up their act. They're using a bit of sillet bang on their strategy.
Like it.
And they did a investor day last week. And so this is basically, it sounds like the Times newspaper was invited along. And yeah, an investor seminar was talking all about the future. And I think it was Barclays came out the next day and said, yeah, we think Reckitt's has got a bright future.
Yeah, I mean, this was one that, I mean, it felt like it was always going to kind of weather the storm when that stuff came out about the baby formula, because it dropped down to, I think, about £40 a share.
Yeah.
And you think, well, you know, these sorts of big companies, they're going to brush this sort of stuff off. There might be a lawsuit, they'll settle something, they'll get through it. They're not going to go broke. Yeah, as we've seen now, we've had a 25% move back from the 40 back to 50.
Well, it is, isn't it? That I tell you what, that doesn't look much,
that
but
share
it
price
is 25%.
Quite right. It's pounds, not pence.
Look at you spotting the error in the Times.
You wish you could get them for 50p.
Yeah, exactly.
£50. But yeah, they got down to 40.
I think of a stock that you could buy at 40 pence a while ago that's now a pound stock. We'll come on to that one. Right, so that's quite interesting. It's a nice little article. It's the Times saying, should you buy? And their final, their summary is at the end, once we get all the way down the end, the advice is hold. The core business growth and market consolidation potential for patient investors follows the restructuring, but the restructuring is kind of edging back because of market conditions.
What's the intimate wellness part?
Oh, you know.
Durex?
Yep.
Yeah.
All their various categories.
Yeah.
But yeah, it is quite funny, isn't it? The group of Silitbang, Nurofen, and then some. Says the man with the 2 children and the snip. Right. Okay. What else? What else we got? Talk about your haircut.
Thank you. Yeah, he's looking sharp. Cheers.
Do you have to get it cut when it's a wig?
Huh?
Do you have to get it cut?
Very good. Yeah, I can't take any hair jabs from you, sir. I'll lend you some for the back of yours.
I have noticed a couple of times actually. If I come down like this, then yeah.
Showing your age, you're really 65.
Yours. Right. Well, what else we got? Shall we just dive right in? We want to know, don't we? Maturin's sitting at home saying, what have they got to talk about this morning? What would be the smarter thing to discuss? Well, the smarter thing to discuss is
here we are,
the £13.4 million that was raised by the Smarter Web company last night. That's above what I thought it could be. Yeah. I thought he might get 10 when he announced 8, because of course the previous round he had tried to raise 4 million, and he raised 6.8.
That's right.
But he's gone in for 8 and he's raised 13.4.
Yeah. So what happens in a scenario like that? Like, is it a case that you go in for allocation and you get scaled back and you only get a portion of what you asked for, or do they just give you more because they've raised more?
So no, this one was different. There's actually a technicality here that due to regulations, he could only raise another £400,000 worth in a WRAP.
Yeah, the retail.
So the retail.
Yeah.
Yeah. So you can see there.
The rest is what? Institutional buying.
The rest is an institutional book build.
Okay.
At the offer price. The offer price was 81 pence.
Yeah. And you had what, the CEO in here 3 weeks ago, and the share price was
32 pence. Was
it 32? I mean, it was wild at the time. It was going 54 to 18 to 20 to 25 to yeah. I mean, it was all over the place. But then, yeah, it started once they got this sort of show of strength in, and then started to make the purchases. I think it gave it more authenticity, didn't it? So yeah, interesting. Really.
So this is interesting. In total now, he has raised 26 million sterling. So let's see if we can just get the I've gone a bit too. Yeah, 26 million pounds he's raised, and then. You put that on some kind of multiple, whatever that is. Between 6 and 9, these things trade, and it starts to get quite interesting because that would let's say 8. 8 times 26 million? Who's a quick mathematician on that?
220 million.
220 million. Right, and there's what's that?
I said me is the answer.
Yeah. And there's now 204 million shares, right? So of course he diluted the number of shares, and therefore as an existing shareholder you do get diluted, but the amount of Bitcoin that can be purchased is big. So 220 divided by 204.
Accretive, I believe is the term. Whilst they're still purchasing more, you're getting more Bitcoin per share as they buy more. Very interesting. I've looked at it a lot, and I've looked at that with correlation with MicroStrategy and their scheme of how it works, and this whole MNAV scenario. It's a whole new world, isn't it?
A whole new world.
Crazy.
I thought it was Disney last time. It wasn't your holiday this time, was it?
It was not. No, it wasn't. It was a very different holiday, and the world didn't collapse this time, which was great. It was nice to go away and not see the market down 10-15% on a Monday morning.
It's the first time that you've actually...
I even went short before I went away, just in case. I was like, I'm literally selling the market to lose money, hopefully, but the hedge is on so that if everything I do wake up, I'm not ruining my trip again. So yeah, no, it's much better.
Right. Did you change any currency on holiday?
Did I change any currency on holiday?
What do you use? Do you use Revolut?
Revolut, yeah.
Yeah. So I'm a Revolut man as well. But Wise are doing their own currency change this morning. What have you seen on that?
Let's have a look a second.
They are
moving, aren't they? Yeah.
Primary listing to the US. So let's take the story. There we go. So doing its currency swap of the exchange that it is listed on from London to the US. Yet another one.
Another one going over the pond.
Yeah, let's see. I actually haven't looked at how this one's traded over the long term. Yeah, it's doing all right, isn't it? And is there really a need to swap? I wonder what they feel like they're getting
like it
from
just
that.
unlocks a whole new audience, doesn't it? Generally,
Yeah.
The rationale for it, a bit more progressive, etc., etc. So they just try and gravitate over there. Yeah, interesting one.
Well, yeah, and that takes us on to our next story, which is in the Times today, and that is that US exceptionalism. Actually, sorry, no, it's not. It's in the Financial Times. Big investors shifting away from the US markets. So this carries on from the US exceptionalism. Is it as exceptional now? And they've actually got comments from two fairly big players. One of them, Seth Bernstein of AllianceBernstein, and he is saying people need to rethink their exposure to the US. The deficit's been an issue, which is of course what Elon's highlighting. It's just getting worse, and it's untenable for US to keep borrowing. So should you want to be as concentrated in one market?
And does he mean specifically the US as a whole, or does he mean US tech?
No, US as a whole.
Okay.
Yeah. He's saying you shouldn't have US equities, US bonds.
I think there's a lot in that.
He's American.
There's, I was talking to a good client of mine, and he's of the same view, which is basically that whilst Trump's done all this stuff with tariffs and with China and with the rest of the world, really, from banning nationals coming into the country to trade tariffs to trying to get involved in foreign policy with all other different global scenarios going on. Is it a case that actually puts people off as investing into the US a little bit more? And as they become or try and become more protectionist, does that actually devalue their attractiveness as an investment? And I think it's probably right to some extent. I mean, his view was that all of the stuff that Trump's done has only really led to a strengthening of the alliance between BRICS, Brazil, Russia, India, China.
Thanks for that.
And
what is it again?
BRICS?
Yeah.
Yeah, that's right.
Go on. Yeah, tell everybody that doesn't know.
What? Well, not everyone might not know.
No, I'm saying, yeah.
Brazil, Russia, India, China, and maybe another. But yeah, you saw it with there's deals that's already been going on between, Vietnam, China, etc., etc. Soybean purchases from China into Brazil, which is mainly the only thing that China is purchasing out of the US. The reliance between the two is more heavily weighted towards America. I think needs more from them than they need from them.
Yeah.
And as they get it from other places, that strengthens that. So then you go, well, as an investment case, am I going to keep my money somewhere that's pretty much annoying the rest of the world?
Yeah.
Or am I going to move it to fast growth places, India, China, etc., etc.? And obviously, you're not going to pile all your money into Russia, but at the same time, at some point, that tap will get turned back on. The UK. The UK had a bid from 8,000 to 8,800 before April. It was the place to be. It was the place everyone was piling money, and you could see it in the way that the market was moving. It was, a fund basically just buying up UK equities. It was a non-stop train. It just kept going and going and going. And that was because over here we've got stuff which isn't tech-led. Look at Rolls-Royce, £8.80.
This is it.
Real.
So money is definitely
Lloyd's,
being
80p
deployed.
again. These things have been heavily.
Is Lloyd's at 80?
Well, near enough.
All right, yeah.
Between friends.
Guys, what on earth's going on with my background? Why is it all out of focus. You're making people think that they're getting squiggly eyes. You going to fix that? Look at the background compared with Pete's background. Oh, I don't know. We're going to get people writing in about that. My sister will be texting. Yes, South Africa is the yes.
Got you. Okay, cool.
Yeah. Right. Let's take a look at the futures then. We go full screen so the guys can try and have a play around with the background while it's out of focus. And yeah, so 5,965 on the S&P. What else we got there, Pete?
FTSE teetering on the 8,800 level, up and down through it yesterday, but really low volatility yesterday. I thought markets were quiet. I was on the US late shift last night.
Oh, were you?
And yeah, me and Tom were here in the office.
I didn't see much value added come through last night.
Yeah, I was doing boring work, not actual trades. But it was it did seem quiet. Like, you know, I think everyone got used to the high vol of April and into May, and it's just gone quieter. And I don't know whether it's that whole sell in May and all the rest of it, and things have just leveled off, or we're just kind of waiting for this data today from the ECB and the NFPs tomorrow to shape whether or not we're going to keep legging up higher or not. But I mean, May was one of the best on record, and it was kind of quiet, right?
It is a big couple of days, actually, isn't it?
Crept up. Yeah, it is a big couple of days.
Yeah, because this non-farm payroll is either we're going to see the start of a job slowdown, or it's further proof that they just don't care.
Yeah.
They just plow on, and nobody, there's a lot of worry, but nobody's actually stopping hiring or sacking.
Some of the initial data points are showing that there have been some weaknesses on the back of all the Trump madness, the tariff madness, rather.
Yeah.
So yeah, the NFP expected to come in at 130,000. I think previous 170,000. If that comes in with a really strong number, that whole Fed positioning of dropping rates kind of gets kicked down the road for longer. And then you wonder, does that put a pin in the move we've seen? I don't know.
We'll have a look at the ADP yesterday, 37,000. So that was a little early. Is it the canary in the coal mine?
Yeah, often. Often that is the precursor, isn't it? And then ECB today, they've got their rate reduction expectation. I think it's going to be the 7th or 8th in a row, from 2.4 down to 2.15, so dropping 25 basis points. Yeah. That's pretty much baked in, I think, as going ahead. But I guess the big question now is that do you get is there kind of contraction in European growth, which we're seeing continue, and they're dropping rates because they have to stimulate? And in the US, is it a case that actually maybe it is exceptional and it just keeps going and going, right? And then what happens to euro dollar?
What does happen to euro dollar? That's the one that I have my mind's telling me there's no way the euro should be at 114, 115.
Well, you're going to drop into an R. Kelly song then.
My mind's telling me.
What's your body telling you?
Go to the gym. Stop drinking. Angeline brought a coffee in this morning for me. It's where is it from? Leon.
Oh, nice.
It's terrible.
Oh, really?
Sorry, Ange. It was a lovely.
Suggestion that counts.
Yeah. Right, Andrew McKelvey, as if we're going to cover that. Andrew McKelvey comment. Look at that.
Oh yeah, I saw it pre-market on the Marlows. They're indicating up 12%.
It wasn't that one. It was the comment above that I was looking at.
Oh. Sorry. Yeah.
It's a pretty good number, though, isn't it?
Huh?
That's a pretty good number.
Well, it's a weird one. It depends how you read them. It's in line, I think. So, are you talking there about CMC results? We're allowed to talk about them. So they've reported their net operating income for the full year that met the average analyst estimates.
Yeah.
Albeit operating profit of 89.6 million, plus 37% year on year, but the estimate was 96.7. So they had a pretty bullish target.
Yeah.
And they've come in under it. So it depends how you read it. You go 37% year on year, but not hit target.
Right.
So we'll see. But yeah, pre-tax profit 84.5 million, Again, estimate 91 million, but their profit was up 33% year on year. So, yeah, we shall see.
Great. And Wiz still struggling with a GTF engine problem.
Yeah, they've been called down 2%.
Right.
Revenue 5.27 billion. Load factor was 91.2%, and they've given no guidance for financial year 26. So yeah, one to watch on the open.
Good. And then we've got some dividends because it's Dividend Thursday. Who's a Vodafone shareholder out there?
You got some?
Yes, I do.
No, not giving up on that.
Oh no, the core in the ICE has always been there. Yeah, I trade around on the platform around the short put options.
Yeah.
But
I know you're a big believer in it, but do you ever feel like there's a opportunity cost of holding something that's not moving as much when you could be doing other things?
do we have to go to the?
Bring up the graphs. Let's hear the investment theory again.
That's interesting. It's 75.80.
What's the divvy? I think I've got it here.
Does that mean it will be 73p this morning?
0.225 cents euro.
Yeah. So Tuppence coming out of Vodafone this morning. And then, I've butchered that chart there. And then Sainsbury's as well. You get 9.7 pennies.
Right.
With Sainsbury's and WPP. If anybody's, it's not one of the sexy ones, is it?
WPP. No,
you wouldn't be
24.4p.
24.4, yeah.
Is
But as a stock, you don't get many people.
Don't see a lot in it, no.
Yeah.
One we have seen quite a lot of business in is the spin-off. I can't remember where it's from. The spin-off, Haleon.
Oh yeah,
yeah. They've had a buy recommendation with a price target of 506, with Berenberg up from 460.
Right, and
and that's one that's been trading 370 to 410 roughly range.
Okay. Well, they are believers. Yeah, four quid.
Yeah.
Yeah. Good.
So yeah, we'll see where that one goes.
Right
as well, but yeah, slightly quiet.
Monkey Man talking about Tesla there. Yes, it did get under 330 yesterday. Not looking good there. And look, Elon's not hanging back. He is going full tilt, head on with Trump. The guy's looking for a fight. And usually, if you go looking for a fight with Trump, you get one.
What is it that I may have missed it, but what sparked the fallout? Because they were.
Oh, he's completely right.
They were boys, right?
That is one thing that he is actually completely right in. The spending is a disgusting abomination. Mm. But if you look behind the scenes, there's a lot of things that Elon would have thought that he would have been due to receive, being in such a powerful position, such as his best buddy made head of NASA. Mm-hmm. So that nomination was withdrawn. He tried to get Starlink to be take control of the FAA, the aircraft control, and they said no to that. He wanted his special pass for the White House extended. Mm-hmm. Nope, didn't get that granted. So he kind of has been nudged to the side, really.
Interesting.
Yeah. And then, worst of all, in the spending bill, then EV subsidies get cut.
So I guess it's an all-round shakedown on his stuff.
Yeah.
Then you wonder how much I guess stuff like SpaceX gets.
Oh, true. Oh, yeah.
NASA doesn't get, because they are a lower cost, I believe. And that'll effectively get government money, what you'd have thought.
Yeah.
Right,
7:54, time for a quick break. And we'll see you shortly. Oh, that one's got me. Neither of us can tell what that is. Let's get the chart back up there. Guess the stock. Now, I still think it's JD Sports, and he's telling me it's not JD Sports.
I think it looks a lot like JD Sports.
It looks very like JD Sports. Right, come on, team. What have you got? What are you thinking there? Has anybody got that? What? It's had 2 profit warnings by the looks. It dropped from 160 last October. It then dropped from 120 to 80 pence, bottomed at 60.
That is JD
Is it an insure? Are we certain it's not JD Sports, Cam? It is JD Sports. Oh, it's not JD Sports. No.
you can't categorically say it's definitely not.
Oh, that's frustrating. Come on, team. Producer Phil is laughing in his DLR train.
81 pence.
81p. Like 45 seconds. Oh. No, it's British. It's British there. Welsh. The Welshie was saying Nike, and I was like, oh, it's not Nike, is it? But no, it's not. It's British.
No, similar stock movement though. But yeah, no, it's pence.
What's 81 pence? It's not Lloyd's.
Nope.
It's not ITV. Is it ITV? Nope, it's not ITV. We're gonna. He's got us this time.
Head scratcher.
We won't give you the answer. We'll keep you guessing. See if anybody comes up. Right, let's go to the. It's Aston Martin. It's bloody Aston Martin. 8 o'clock. Ring that bell, sir.
There we go.
Aston bloody Martin. Well done, Phil. Well done, Phil. He's nailed it. That's a good one. That was a good one. Thank you for the clue. Right, let's see what is kicking off this morning then. Pete Ward, I want you to give the people this in your best impression of somebody who's just got back from holiday.
Yeah, not too sure what you want from me here. But yeah, what we got? We've got WPP at the bottom here, 4.58% down.
With the dividend?
With the dividend, yeah. Vodafone with the dividend. 2p come off there, hasn't there? And they, 76 yesterday? So they're trading just under, I think.
Yeah.
And then, yeah, you've got BP, Imperials, Whitbread, Rolls-Royce all off a little bit. But at the top of the charts, you've actually got the miners. Anglos are up there. Antofagasta, Ashtead, Reckitt's, the one you mentioned earlier.
Yeah, Reckitt's
bucking the trend there with their intimate wellness.
It's a smooth glide up to £50 and 60.
Yeah, a safe stock. Should we leave it there?
There's more. We should probably leave it there. Antofagasta up 1%. Glencore up 75 basis points. Rio's up 60. Pete, the consumer of extra small, take us through the rest.
Right. Well, I mean, what we got here? There's nothing really that exciting, is there, on there? What happened to? Have you got Mighty on there?
Mitty.
Yeah, let's have a look at those.
Mitty.
Mitty. Sorry.
MITTIE, is that right?
Yeah.
Down 2% at this moment, but it is a wide spread.
Okay, fine. And then let's see where CMC have come in since we mentioned them. Indicating off 12%. So yeah, 249.50 indicated. I guess. So yeah, whilst those numbers year on year were good, they were below the expected, which is, as we know, with all results whenever they're coming out, it's not necessarily what they've done year on year, it's what the market expects them to do and what they basically said that they would put out to do. So, yeah, small potential there, but let's see, it's still in the auction and will be for another 3 minutes, I think.
Numbers from Doc Martens as well. Full year revenue 787 million, pre-tax profit of 8.8. Seeing return to growth in 2026. So that one down at 60p.
Yep, so they're trading 59.50 at 60.95. I think they've upped their divvy as well, maybe.
Right, what about in Europe? Any big moves in the Eurozone ahead of that rate cut today? 1:15 p.m., you're going to see interest rates drop to 2%, where their inflation number is as well. So real rates.
2.15 is the expectation. But yeah, there or thereabouts.
The deposit rate, yeah.
And then I think the big one is what Lagarde says after. Like all of these things, it's to do with the commentary that comes after, more so than the actual number. And that'll be 1:15 today, followed by the statement. So plenty going on around 1:15, 1:30. You've got jobless claims out of the US as well.
1:30 is a big one
ahead of
today.
the non-farms. So yeah, keep your eyes on
Look,
that.
if you are looking at European stocks, up 3.5% is your buyer. Then ASML up 1.3660.
I think they got upgraded a day or two ago. Price target on those.
Oh, did they?
It was Barclays, yeah. ASML is an interesting one, isn't it? Because everyone says the whole AI sort of space can't really function without the specific chip
What they do.
they make, and yet it still seems to struggle to break here.
And
I don't know why. I don't know what is holding that back.
let's have a look at that chart, because you're exactly right. And every time it drops, then you know there is some temptation, I must admit, around that 600 level.
Yeah.
But yeah, look at that, down to 520. That's maybe one for selling options of.
Yeah, I mean, it's the one that I always see, and it seems like any shred of bad news, it gets hammered.
Yeah.
And when there's a bit of a rally, it slowly creeps back up to about here, and then it doesn't kick on.
That's right. You would have thought Nvidia numbers would have given it a bit more of a...
Yeah, exactly right.
Yeah, but yeah, typical European stock, you know, the laggards. Yeah, so 660 there. And then the losers in Europe are E.ON, Lufthansa, Air France, and Ryanair. So the airline's getting a bit of a cuffing there, with Airbus down 90 basis points. Right, I'm take a quick look at commodities there as well. Pete, hard at work. Look at this man. Everybody that is serviced by this man, just watch. Now where?
What are you looking
Oh
for
yeah, we
here?
haven't looked at Smarter Web yet. Where's this one opened?
86, 87.
86 to 87.
What's your thoughts?
Might go to a break. Really? I mean, it was a big dilution, but
I don't know. It's a
yeah,
crazy one.
you crack on a minute there, Pete.
It's a crazy one, but yeah, let's see where we go. So what else have we got moving around now?
Yeah, do you want to go through the old commods there? Here we go.
Are you pulling them up?
Oh, come on, there we go.
Okay, yeah. So what have we got here? Nothing too crazy going on. I mean, gold is the interesting one with this sort of range of 3150 to around here, really. And I think the numbers today and tomorrow will be pivotal for that to see whether we push higher.
That could that's worth a look at the options market. So in 10 minutes time, we'll have a look at the gold options market for the week, because I think you're absolutely right. That is pivotal.
Yeah, and then oil, I mean, to say that is one of the most volatile commodities that we have, it has been kind of worryingly quiet for a while on that. But yeah, there's nothing to really explain too much there. Everything's kind of pretty much where we left it, right?
Yeah.
But yeah, gold is the one that people are keeping their eyes on ahead of non-farms and rate decisions and all the rest of it. And it's one that's holding up very, very well. And it'd be interesting to see if it does try and make that ascent up to 4,000, which is, I think the start of the year is one where I think it might be Goldman's that put it up there.
Oh, we're just getting in my ear. CMC are open, and they're not opening well. Down 15% this CMC. Look at that. 240. Having said that, Pete, that's only back to where it was at the start of May. So That is...
Yeah, I mean, it's been a wild ride on there. I mean, it was, it was like 80 pence, and then it all of a sudden went in a straight line pretty much, non-stop, all the way up to 330, 340. And then we were back above below £2 again not long ago. So, well, yeah, where's that April? Yeah, I mean, like everything at the start of April, it all got hit. But there was a good trade to be had in most of the brokers, I suppose, whether it was them, whether it was Hood, whether it was Coin, Schwab, whoever. They all have done pretty well on the back of the volatility that we saw in April, as you'd expect.
You just reminded me to have a look at Lloyd's 76. So it's trying to get to that 80p level, isn't it? And so it's 78. It sort of stumbles. We probably need a new catalyst there.
Yeah, I mean, they were shaking off the stuff from the motor claims, wasn't it, with Close Brothers, and I think it's kind of it's returning to form now. I do think it will probably touch 85, 90 by the back end of this year, all being well, because it's still paying a big dividend. And it's becoming more and more attractive.
That's something. Actually, let's have a look at that as well. In 5 minutes' time, let's have a look at the dividend yielders in the FTSE.
Yeah.
Let's get an update of that, because I haven't looked at that for a while.
Yeah, I mean, you can. Are you familiar with the stock screener on the platform?
Whoa. Now we're talking. Right, that's exactly what we'll do then. 8:15, we're going to have a look at the old stock screener. But before then, with Wiz down 10%, with CMC down 15%, let's go to a quick break before we go into
the next section. Dividend yields.
I'll give you a clue.
Running.
Yeah.
Yours, mine, running markets. Fast market.
Yes.
It's been a while. You told me to do it like I've been on holiday.
Yeah.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Right, before we go into fast markets, let's get those likes and subscribes in. So if you're watching and you're not subscribed, 50% of people that watch are not subscribed.
And that means you can't comment, right? And you can't put anything in the chat.
Well, I think that's true. Yeah, I think you're right. Yeah. So join the party. Come and join the party. Hit the subscribe button. We've got 885. We've got to get, what, producer Phil saying 900 before the end of the week.
1,000. Come on, let's be bullish. Let's go.
We're trying to get...
If there's 50% on there that aren't,
yeah,
hit the button and we're done.
Exactly.
Yeah.
So hit that button. Hit the like as well. That would be fantastic. But we are going on to
Those
talk
are
about...
rookie numbers. Come on. Pump those up. Get those up.
What a show. What a movie.
So...
right, we're talking about, it's Thursday, so we're talking about dividends, right? And dividends in the United Kingdom, look at these beauties you can get.
So, I think what you should first do here, just extrapolate the side bit first.
Extrapolate the side.
So bring out, the finder on the left-hand side, just so that people at home can understand how to find this. So
there we go.
On the left, you see at the bottom there, you've got that. If you bring that out, that's it. Yeah. So show the icons, right? So you'll see there, you've got stock screener, fairly new piece of kit that we've put into the platform. You click on that, and now you can bring it smaller again and show where you were.
And then it brings up this menu.
It brings up
here,
this, and this is something that basically they've been working on for a while. It used to live on the home page, so it wasn't in the dealing platform. And as we know, the majority of clients just go onto the site and log straight in, right?
Yeah.
So they miss all the stuff that's in the home page. So we're trying to embed as much of it as we can in here. The stock screener is a fantastic tool in that it basically gives you the ability to filter and search for what you want. So touching on what we were talking about earlier, which is UK investment, UK-centric, domestic investment, foreign capital flying in. Why would it fly in? Well, maybe because of the dividend yielding stocks, right?
Yeah.
So
nice.
You can go straight up to here and go dividend yield and put very high and maybe high as well, or just do very high for now.
Yeah, let's stick very high.
So that then filters anything bigger than 5% as a dividend yield, which is attractive. You can then select your region. You'll see there at the top left, and you can just change that to simply just showing United Kingdom. And then once you've got that, you can then obviously order your columns. What I would do is what you've done there, market cap first. So biggest to smallest.
Yeah, that gets rid of the...
It filters out the stuff that, yeah, it might have a huge divvy, but it's also maybe a train wreck of stock. So HSBC, lovely, nice big stock.
Yeah.
And then you go across there, right, dividend yield, 5.8%. And so you go, right, okay, I'm trying to build a war chest in my ISA or in my SIP or whatever that's going to just pay me a dividend. And they're going to be fairly stable, hopefully get some growth in the stock, but if not, I'm getting paid to hold it.
Yeah.
So this is where you can go to look. And not only do you get that, you also get the analyst target recommendations. You get the PE ratios. You can filter by sector. So if you just want financials, you can do that. If you just want defensive, you can do that, et cetera, et cetera. Obviously, what came out Monday about the defense spending and the boost that we've seen in BAE and all that sort of stuff, you can build yourself, excuse the pun, a war chest of that stuff and go, right, okay, yeah, I'll have this as my little thing with this and it's paying me a dividend and it's all done for you. So this really good piece of kit, this.
But this is real traditional fundamental investing, right? And this is how I was brought up. This is how a lot of people our age were taught to look at stocks.
Yeah.
Right? We've had the Mag 7 explosion and everything's been incredible. But when it comes down to your ISA, your SIP, and long-term investing, then this stuff's really important, isn't it? Because you want to be in those stocks that have got, there we go. Just a question in the chat there. So,
that was good.
Vodafone is paid Vodafone dividends paid twice a year.
Yeah, and it's also 2 cents, not 2% today. 2 cents.
Two
2 euro cents. Well, 2.2 euro cents, which is 2p, I think, pretty much.
2p.
2p over 70p stock, but it's paid twice in a year. So you add it together, and then you get what the percentage dividend yield is. That's the question that was in the chat there.
That's right.
So like you say, traditional investing. So more stuff for our longer term trades. Although to be fair, tax treatment on the dividend in spread bet is attractive, in that you receive all of it. So worth being aware of that as well.
You get it all.
Well, I mean, it's a frank dividend, so part of it is taken at source, but then you get the remainder. So nice. It's interesting on all of our products basically that we offer. But if you were trying to build a medium to long-term portfolio and you wanted something that's going to pay you, and then obviously you can compound that.
So how about
this is where you want to start.
Let's start to look at these headlines. Stock screener decisions there, right? So price target upside, we'll say, well, definitely upside 20%, upside 5 to 10. What we don't want is stocks that have got downside. Then we look at analyst consensus, strong buy, moderate buy. Shall we let the holds in or not?
No.
Okay, let's not. Hell no.
We're here to make decisions this morning.
Investor sentiment, I don't really care about that quite as much. And yeah, that's probably about it, really.
You could do the smart score as well. That's a roundup
yes.
ranks, which basically gives you a nice an enhanced filtering of even more stuff. So media buzz, social media stuff, all that jazz. Pop that in there. Go 10, 8, and 8.9. Fine, right. So now you've got the cream of the crop.
And look at those smart scores as well. 10s, 8, 9, 9, 10. It's like my performances.
What? Strictly Come Dancing?
Yeah. 7.
Certainly not your dating show performance.
Oh dear, those were the days. He's just too romantic.
Is that what they said about you?
That was me. Shopped on international television.
Oh, well.
He's just too romantic.
He just didn't understand you.
Yeah.
Literally.
Yeah. I was very Scottish.
Just grunting at
her. Right. So, and what shall we still do by market cap?
Sure.
Because that's taken out a lot of the options.
Yeah.
Maybe we've gone a little bit too particular there.
Maybe, but Rio's, that's one that you talk about quite a bit along with Anglos and whatnot.
Yeah.
And that it's just an interesting way to do it. I mean, you could do it in any region. You could build, US. You could, if you wanted to do the whole emerging markets or the BRICS that we were talking about earlier, you could build it, you could build that.
Shall we add in Germany?
Sure. Yep.
Let's add in Germany there, and France as well. Take our French friends in.
Yeah.
Okay, so there we go. So Rio Tinto, Daimler Trucks, Imperial Brands, Vodafone. Look at that, getting right up there. Admiral, Porsche, Evonik, Scheffler. Let's see what as we go further down. Then, Mutares. I wouldn't touch that one.
What would be really nice would be if you could say, right, I want to purchase 100 grand's worth of this stuff and split it across it, and you hit a button and it just goes whoosh, and it makes that noise.
That would be great, wouldn't it?
Yeah. I'm an ideas man, Rich.
Or that's when you sell it. Yeah. So that's really interesting. It's on the platform. As a reminder, it's down here in the bottom left-hand corner. That is the stock screener. Boom. And that's how it comes up. I know it remembers your selections as well. Excellent.
Yeah, that's it. And you can just reset and go back to start.
Interesting. Rio Tinto was our stock of the day yesterday on the chart of the day. And we hadn't realised, I hadn't realised how much it had actually fallen. So shall we just take a little look at Rio's there. Add that to the workspace. Yeah, this one has really come off the boil. So there's my chart, but that's from a long time
halfway back
ago.
down to where it got down to in April, right? What's been the driver there? Do you know?
CEO left.
Okay.
very abruptly, and I don't think there's been any sort of more reason given. But let's have a look at iron ore. So remember the shape of that chart. Yeah, there's your answer. Rio Tinto, 70% revenues are iron ore, and there it is. If I bring that into the last couple of months, you just see it, iron ore price coming off the boil. Right, so that makes me step back a little bit, because of course your dividend with Rios is dependent on this, because that's your big cash cow for Rio revenues.
So you think maybe it's coming off on the fact that potentially they'll have to trim dividend?
What I would watch was any positive news coming through in iron ore. If suddenly this popped up 4% one day because of China stimulus, China industrial production, PMIs going up, or a nice trade deal, then Rios would be my first purchase.
Okay. One for the watch list then.
Yeah, definitely. Right, anything else you'd like to look at, Pete Ward?
No, not so much. What, in terms of platform bits and pieces? There's nothing.
Or stocks?
Stocks. Well, let's have a look at our old friend Nike, shall we?
Oh, good old Nike, yeah.
Because I've been kind of waiting for it to buck the trend a little bit. And it's put its head back above $60.
Yes, it has.
But it is still so unloved compared to where it was. And they've still yet to really come out with anything that's brand new or edgy, I guess.
There's the long-term chart on that one. You've made me put this blooming thing up. Such a waste of space that when it's open.
Yeah, no, it is. But if you don't know what's there, you've got to know, right?
Yeah.
Once you become a robot like yourself, you can you understand what all those icons mean. But yeah, but the good thing about the platform is you can, if you do run a couple of screens at home, you can pull your workspace into another browser and have it on the two screens.
Nice.
Etc. So you can sort of.
How many screens have you got at home?
3. So laptop and 2 monitors.
Wow.
Yeah.
And do you allow drinks?
Same as here.
Do you allow drinks at your computer? Because I've always been told no cups of tea or.
Yeah, very much so. Yeah, I can't function without them.
Really?
Yeah.
So you will have.
Not as bad as Phil, the tea addict, but yeah, I like to have. I'm a bit more of a coffee man.
But you're happy to have it on the table in front of you.
Yeah, I'm not a child. I can not knock it over for a day.
Well, that's funny because you have walked right into that one.
Yeah, it's brilliant.
Yes.
Very good.
Pete Ward mentioned me when you're on holiday.
That's a very good.
I'm not a child.
That's very good tee up.
Pete Ward messaged me from holiday. White t-shirt, white shorts.
No, off blue t-shirt with white shorts. I'm not the snowman. I wouldn't wear a white t-shirt with white shorts.
Shows off the tan.
Yeah, well, yeah. It's last night, isn't it?
Pete messaged me one night. Oh, you'll never guess what I've just done. A whole glass of red wine.
Yeah.
All over the white shorts.
All over the white shorts. Yeah, I was picking up my daughter's like little rucksack with some of her toys in, brought it up to the table, and then just clipped the edge of the red wine, and it just cascaded down towards me, and just looked like I've been shot.
Brand new shorts for the holiday?
Brand new shorts and t-shirt. Yeah, both ended up in the bin.
No,
fortunately they're only from Next, so it's all good.
Okay.
Cheap and cheerful.
Properly.
Smart holiday buying. But yeah, no, you're right. Yeah, the comment of I'm not a child, well, but I was fairly long wine, so.
Good stuff. Right. Welshie saying had a meeting this week. CEO was wearing classic Jordans. Nice.
Nice.
Very nice. Buy that. Invest in that company.
Yeah. Our mutual friend Jamie, he's a big Nike man.
Yeah.
In terms of the shoe, always wearing a fresh pair of the shoes.
Big paddle with him tomorrow.
Oh yeah.
Yeah.
Oh, you
First game.
saw another client of mine there the other day. You mentioned that.
Yeah.
Yeah. You playing a lot now.
Yeah. Trying to.
Yeah.
I'm not very good.
Well, you keep practicing, son. You'll get there. You played Phil yet?
No, but I'm not ready for that.
Okay, fair enough.
So if we go on to my my performances so far, I've had about 5 games, and they are loss, 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 loss.
Is that the paddle record or the training history?
The
Now we're going.
Now he's warmed up. That coffee just kicked in.
Stop asking me about the market. Let's just talk about selling drinks.
So yeah, playing paddle with Jamie tomorrow. But he is a big fan of Nike, that's right. And it's interesting. It's still...
I know you're a believer of like 6 to 12 months on this. You've got to just be patient and, you know, it's whether or not you park the bus up now or you just wait.
I'm happy to sell puts in size here because below 60, and I'm short the 60 puts, the 65s and the 67 and a halves. But at the same time, I'm short the 67 and a half calls as well because I don't think it's suddenly going to motor higher. I think the first time that you see this thing really start to move will be post-summer, October, November, December. So the set of results that are around that time period, that's when I think it starts to get interesting. So I'm long December calls for the 77 level. So I think, I think that's if the market holds.
Yeah. Which percentage-wise is pretty big, right? It's like nearly 30% move from here.
Decent. Yeah. Arthur Fox Haig asking, what is SWC's current multiple of actual cash and mark-to-market BTC assets? So I haven't looked into it that closely with the cash and the BTC. All I've done is taken how much he has raised so far, which is 26 million sterling. Taking that 26 million sterling and the current share price, which is 85 pence, then does it give a market cap?
There's 150 this morning.
Yeah, but it's new because he's got more shares now.
Maybe it might give me one. Hang on, let me see. Yeah, I don't know if it's going to be up to date. 1 second.
So
market cap. No, it doesn't give me it.
Well, we know how
it's on Aquis. I don't get as much intel from the L2 screen. I don't get cumulative volume. I don't get.
That's all right. There's 204 million shares times 85 pence. So it's 173 million. So the market cap is 173 million. We then divide that by the amount that he's raised, or his net asset value, which is 26 million. And it's on a 6.67 multiple of NAV here, having been as high as 10 at one stage.
Yeah.
And then it was 8.5, and now it's 6.66.
And they've got about $12.7 million of Bitcoin.
Yeah, that's right. So there was a Bitcoin announcement this morning as well that he bought 34.
Yeah. Well, 39.52 Bitcoins. Average price of 104,967 in dollars, 77,707 in sterling, making £3 million purchase.
Yep.
From the 8 million rate, from the 30 million rate. Still got 10 million cash. Still got more to buy, etc., etc. But in theory, yeah, 122.76 total Bitcoin holdings. So call it 1, 2, 3.
So 123 Bitcoin.
Yeah. So roughly
in
12
5 weeks.
Yeah.
And the raises have gone 1 million in the IPO, 2.2 million in the next round, 3.4 million in the next round, 6.8 million, 13.4 million. So you can see how the raises are getting bigger, and the share price has gone up obviously to 85 pence, but then the dilution, the multiple to NAV starts coming in. So now only a 6.7 times multiple.
Yeah, which is what we found last time when it got below the 10 times multiple, and then buyers step in because the stock then becomes cheaper.
So then let's say in theory he raised the same amount again, right, in a few weeks' time. That would be done at a 6.7 times multiple. So the dilution would be what's a 200 million market cap, and if he raised 13.4 million again, the dilution's 6%, 7%. So then you add 7% to the number of shares, which would make it 220 million shares.
Roughly.
And that would mean that you would then have 40 million sterling So 40 million sterling on a 6 times multiple
240.
Is 240, and you'd have 240 million market cap divided by 220 million shares is £1 and
20.
10.
£1.10.
£1 and 8. So £1 and 8 pence.
But all of this is, you know, it's all interesting and it's all math. But what happens if Bitcoin comes down?
And if Bitcoin goes down, that's the other thing.
Which is the huge elephant in the room, right?
Yeah.
Because since this has been doing this, it's been above 100,000 and touched the all-time high. I mean, it's been phenomenal timing. So that's the big unknown.
So that's
because obviously when we've seen in the past with strategy, MicroStrategy, etc., when this thing, you know, Bitcoin tanked, that, you know, it dropped pretty hard.
Yeah.
So yeah, I think caution.
Oh, absolutely. Oh, yeah. I mean, this, you know, this is
The theory works, you know, in terms of the accretive purchasing and increasing Bitcoin per share using money from equity and not diluting a bit, but then getting more of a movement in the actual underlying and the size of what you've got. That all works when you're going up the stairs. So just what happens if it
so
when it comes down the stairs.
So the big risks are a contraction in the multiple of NNAV, which means that belief would start to falter. That's why that would come down. The price of Bitcoin itself, but then I guess he's doing that at a gradual rate. It's not like he's getting the cash and going all in.
It's a smooth curve of investment, isn't it? It's just like a drip, continual purchase where you go at the end of the year, right, we've got this much now and our average price is whatever. Interesting.
Julian saying it'll all end in tears.
Love it. Love the optimism.
Whose tears? The ones that are involved or the ones that aren't?
Oh, that's it. Is it the FOMO? Is it the people on the sidelines going, I should have got it at 20, should have got it at 50, should have got it, you know, same with MicroStrategy. I mean, no one wanted to buy that thing at $200.
I didn't understand any of this until I watched 2 hours of a podcast on what MicroStrategy was actually doing. And we talked about it yesterday. Really good interview with Imran yesterday on MicroStrategy and the convertible bonds. So well worth a watch. We'll put it on YouTube today, hopefully.
Yeah. There is actually, I found a short video of just a bloke talking to his computer, 10 minutes, explaining it in a quite nice way, which is worth a look.
Great. Pete Ward, thank you very much. It's been wonderful to have you back.
Thank you for having me.
You on next week?
Not as it stands, but you never know. Watch this space.
Producer Phil, come on. Step up. Great. Next, we've got Angeline. She's going to be talking crypto. That's right, decoding crypto in our first of a new section. Very exciting. If you're interested in crypto, give us a follow, give us a subscribe, give us a like. And if you aren't, go have a cup of tea.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey trader friends, welcome back, and we are talking crypto today with Ryan Grace, the head of Tasty Crypto, all the way from Chicago. He joins us right now to talk about this on a day when we have this brand new product. I'm sure you've heard all about it already. Ryan, how's it going?
Angeline, I'm doing well. Thank you very much for having me, and it is an exciting day. We've got spot crypto launching in the UK. What else could you hope for?
I know, right? I'm just bunging this on the screen for you, trader friends, so you can have a look here. But there you go. You can find this online, everything you need to know. Prior to this, it was only open to pro traders, but now, anyone can take advantage of this, and you can trade with us on the platform. So this is something that you are already au fait with, Ryan, because you guys have had it over your side for some time. I guess our traders are more used to, spread betting CFDs, and they want a bit of hand holding. So I often get asked, by some that are unfamiliar to this space, what is crypto? Give us the very sort of filtered, easy to understand version of this, because, to someone who is relatively new to this space.
Yeah, absolutely. So to take a step back, crypto really is this catch-all term that's used to describe everything from blockchain technology, distributed ledgers, tokens, cryptocurrencies. So there's a lot that fits into the box. But the way to think about crypto is very simple. Crypto is a technology. And what is this technology? It's internet money. And what do I mean by that? It's a way to transfer value on a network. It's permissionless. I don't need to go and ask the bank, can I do this? I can connect to the internet and I can transfer value across this network via blockchain technology, which is how it works, and cryptocurrency or tokens. That's the value transfer mechanism. So we can get into all of that. But again, it's very easy to think about. It's very simple to think about. It's a technology.
That's right. And I'm just going to whack up the platform just very quickly to show you our offering at the moment. This is amazing because, Ryan, as you know, it's, we've done this at speed and built it out for our clients here who have been asking for this for, a long while. I hold Bitcoin and Ethereum. And what I tend to say to people is it's a bit like an online game token, right?
Yeah, I think so to some extent. There are so many different cryptocurrencies, and in some cases, you have meme coins, which maybe there's a community behind it, but maybe people just think it's fun. It isn't intrinsically worth anything. On the other side, you have Bitcoin, which the analog tends to be digital gold. And it's pretty compelling, I think, there's an argument at least around this, that it certainly is digital gold. And therefore, it has intrinsic value in that, well, you can transfer value, or it is a mechanism for doing so, across the network. So you have a couple different ends of the spectrum. You have a lot of utility that can be gained from some tokens. You have others that arguably maybe don't have that intrinsic value like I mentioned. So you need to understand and learn a little bit about all of the different tokens. But I think the best place to probably start is, like you've mentioned, you've got Bitcoin and Ethereum in your portfolio. Bitcoin is the largest token or cryptocurrency by market cap. I believe Ethereum is second or close to it. So I would probably start with the larger market cap tokens, but you really want to learn about all of these because they're very different in the same way that when I go to the stock market, I want to trade shares. Well, they're all different companies.
Yeah, and they all have different functions, different backgrounds, different ways of understanding that market and asset class. I often get asked, the whole crypto market, is it down to supply? Is that what is, holding the price up? There will only be, for example, 21 million, reportedly 21 million Bitcoins. So it's, designed to be rare. Give us your thoughts on this.
Yeah, absolutely. So if we just stick with Bitcoin, there certainly is the scarcity element to it. And that's probably, where that direct relationship or that analogy between digital gold and gold or Bitcoin and gold comes from, why we call it digital gold. There's only going to be 21 million. I believe 19 million or so have already been mined. And it's very likely from the early days that a couple of million Bitcoin are unrecoverable. They've been lost. There is some risk with how you store cryptocurrency. And when you go all the way back to when this came to life, really back in 2009, 2010, you have the Bitcoin pizza story. People didn't know what this was, what it was going to be worth. And so you have people that have crypto on hard drives or Bitcoin on hard drives that have been lost. So all of that said, that is one of the primary reasons that I think people are interested in it. But you have to ask, why is that interesting? Well, that's only really valuable or interesting in a world where you want to invest in hard assets. And the reason why you'd want to invest in hard assets is because you're seeing the debasement of fiat currency, right? We know how indebted the US and many nations just around the world are. We know that we have slowing population growth, in some cases slowing productivity, and we have so much debt against that we constantly have to, when you look at the central banks, you look at government spending money, you kind of have to stimulate. And that monetary stimulus is debasement of the currency. And so we've talked about inflation. You look at CPI, you look at consumer inflation, but really it's more about the debasement of your purchasing power. And when you look at something like Bitcoin, it's very compelling because of that. And when you look at what drives this asset on the margin, it tends to be global liquidity, financial conditions. It tends to be central bank balance sheets, right? There's a pretty strong correlation between the expansion or contraction of the Federal Reserve's balance sheet here in the US and the price of Bitcoin. There are also some charts that you can point to if you look at money supply, or global M2, on about a 90-day lagged basis, and everyone can find this on X, we'll share this around, but on a 90-day basis, on a lag, there's almost a 0.95 correlation between the price of Bitcoin and what we see in terms of global M2. So when there's more liquidity in the system, there's more credit in the system, interest rates are zero, and we continuously stimulate this broader global financial system, there's really then a case to be made for hard assets, and Bitcoin, given its scarcity, like gold, is considered a hard asset.
We're also seeing uncertainty drive this, right? Each time we get, markets soar, as you saw in April, and to a certain extent early May as well, and this sort of erosion of trust in fiat currencies, that tends to also support Bitcoin, correct?
Yeah, absolutely. And I think it gets back to the point that we know if there's enough volatility in the system, or if things get bad, the monetary authorities tend to step in. I'll use the Federal Reserve as an example. I'm here in the US, but there is the Powell put. There is the idea in the market that if you have a large enough drawdown, Trump tweets enough, there's enough volatility that's sustained for a period of time, we'll be more aggressive in cutting interest rates, and ultimately we will be back to expanding the balance sheet through open market purchases. And that tends to drive all asset prices higher. That relates to asset price inflation. And when you look at the returns of Bitcoin and how volatile it has been, it's been a pretty good trade. It's been a decent performing asset, one of the best performing assets over the last decade. And until that isn't true, That's something that people believe in the market. It's reflexive in nature, and I think that's one of the things that we do see. Now, it doesn't mean that crypto prices, when you think of them as risk assets, aren't going to be immune to short-term volatility. We've certainly seen that. We go back to some of the tariff announcements here out of the US, had a lot of volatility in April. Bitcoin had a significant drawdown as well, went down to about 75,000.
Yeah.
Has since bounced. But I think those are corrections that in this environment, you look to really take advantage of.
Just whacking out my chart here, Ryan is back up above the 104,000 level, and as you pointed out, it has had extreme, volatility, but it is, at levels, most people would not have imagined even, 10 years ago. It's quite incredible. Lots of people also watching us asking, how does crypto work? I mean, for example, I've got a wallet. How would you explain to someone who doesn't necessarily have a digital wallet?
Yeah, I think the easiest way, without getting into the weeds around the technical complexity, how wallets work, you have a private key, a public key. In some cases, you're in control of that. In other cases, it's held on the exchange. I can dig into all of that, but the way this all works is through a distributed ledger. So when you think about a blockchain network, it's a bunch of computers, a bunch of nodes. So decentralized computer network, it's all running the same code. The easier way to think about that, or like, what does that mean, is really that it's a spreadsheet in the cloud. All of the nodes on the network have the same version updated in real time, and it's cryptographically secured. So there's all the fun crypto details, but they all have the same version of the spreadsheet. And so that in itself is what powers cryptocurrency. Cryptocurrency is then a use case. It's an application of this technology. So we have blockchain technology, we have this network, distributed compute, and then a very compelling use case of the technology tends to be the ability then to transfer value on that network or to move it across the ledger. How do you do that? We do that with a token, do that with a cryptocurrency. So Bitcoin is a cryptocurrency. Bitcoin, and when we talk about it this way, we tend to use a capital B, but Bitcoin with a capital B is the technology. It's the blockchain network. Bitcoin, lowercase b, quite often, is the cryptocurrency or the token. It's the native token to that blockchain network, and it's how that value is actually transferred. Now, we price it in fiat currency, so as humans, it has value to us, but as the computers talk to one another and verify transactions, this is the cryptocurrency. It's what they pay each other in order to validate these transactions with. So I don't know if that's everything you're looking for around how it works, but I think because this is so complicated, sometimes it's easier just to start with kind of high-level concepts. But again, I think about it as a spreadsheet in the cloud, and the cryptocurrency is how you move value around or on that spreadsheet from one column to another.
And you've explained it beautifully because it can get quite complex, right? And so last but not least, before I bought my first, crypto, I was told one thing you have to know, Angela, one thing, the key takeaway is no key, no coin. There are many keys, many wallets that you mentioned earlier out there. Which ones do you like? Which ones do you use? Just give us a quick summary.
Yeah, absolutely. So the term no key, no coin, or not your keys, not your coins, relates to the fact that if you have the seed phrase, if you have the private key to a cryptocurrency wallet, because this is a distributed database on the internet, if you have that key, then you are technically in control of that asset. Anything that's held at that wallet address, you can move it, you can transfer it, you can sign transactions, you can do things with it. Why this matters is because if you go back in the history of Bitcoin, you've had exchanges that have been hacked. Most recently, you had the largest exchange in the world a couple of years ago in 2022. Well, we found out it was a fraud, or they were doing, I should say, fraudulent things with the crypto. Anyone that holds their crypto on an exchange, and it's not right or wrong, it's just the objective truth here, but that exchange does have the ability to take control of that crypto. And so in the case of FTX, they were using the customer's assets. When you hold your crypto on an exchange, like a Coinbase, for example, or a Binance, you're not technically the owner of the crypto, but that's also true about your money in the bank. It's just that we trust in these institutions versus this relatively new technology, or we trust in them more so. So when you hold your key via a self-custody wallet application, and my favorite happens to be Tasty Crypto, but there's many others that are out there. When you hold your key, you are the only one that's in control of that crypto. And you can think about it like this. If we go back to the example of a bank, you have your money in the bank is going to lend that out. We have a fractional reserve system. You're not technically in control of your money. There is a chance there's a bank run. There is a chance that when you go to the bank,
There was
you don't
one
get
here in
it.
the UK not too long ago.
Yes.
Yeah, that's right. So it's all
But
about
we do
confidence.
trust.
Yes.
We do trust that the Bank of England will make everyone whole, or the Federal Reserve will make everyone whole. We have historical precedent of that to an extent. In crypto, well, there really is no other counterparty. So you're either in control or you're not. But when you think about the self-custody wallet, again, that would be similar, in my opinion, to, it's not right or wrong. You have some money in the bank. You have some money in a safe at your home where you are the only one that has the combination to that safe. That's the self-custody or non-custodial wallet. The custodial or custody side of it is where it's held with the exchange. So that's there's some nuance here, but those are the differences in terms of how you store your crypto.
Thank you very much. We are very, very lucky to have you with us and explaining that so gracefully. Ryan Grace, head of Tasty Crypto. For more on this, do hit the subscribe and like button. Of course, crypto is a risky product, so do make sure your guardrails are in place, and to make sure that you know what you're doing. You have your keys in place as well. But do hit the like and subscribe button if you want to see more in the series with myself and Ryan.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal. And I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach. And I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. At IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome back, trader friends. I was wearing black earlier, but I'm now wearing white. See the amount of quick changeover here that we have for our special clients. And we are 2 minutes away from the opening bell of the all sessions. We are counting down to that at the moment. Let's just get you across some of the indices and how they're looking at precisely 8:58. We've got, it looks like risk on this morning. Wall Street, US Tech 100, marginally higher there. Germany 40 also up 0.3%. And also we're seeing the CAC 40, or rather the France 40, up 0.33% as well. FTSE up just a touch, but now edging towards that neutral territory. We've got plenty more to go. Let's have a look at the forex side of things as well, just as we count down 1 more minute to go. And we are just taking a look at that for you because the dollar versus the yen, I can tell you, that is an interesting one to look at because we are now starting to see it head into the cloud there. It had been previously rejected by the cloud prior to this. Are we there yet, gallery? Are we there yet? 30 seconds to go. I'm going to get my watch list up. Trader friends in readiness, and Monkey Man, I will look at BTC for you right after this, but having a look at the all sessions there and getting my bell. Here we go. Early 9, 8, 7, 6, 5, 4, 3, 2, 1. Here we go. Right, and we are off to the races. Let's have a look here for you on the winners list because we are risk on. We got Novo Nordisk up 1.2% all sessions there. HP as well, as HP Inc. rather, up 8%, and Virgin Galactic all sessions also heading higher. We're seeing some of the drug names there as well. Moderna, my favorite ticker of all time, NRNA is the ticker, up 0.33%, and Pfizer also riding higher there. Let's have a look at the losers list now that they're shaking out. We've got Beyond Meat there, all sessions down. Ouch, down more than 3% there. Any of you eat Beyond Meat products out there? I have tried them, but they have a strange texture, and I can tell that it is not actually what it's meant to be. NEO down 1.6% there. And Peloton Interactive also down 0.4%. That one continues to hurt. And now the company is trying to lease out its old bicycles as well. Tesla, just taking a look at that one because we have seen this move quite a bit in the last session, down 0.75%. Adding that to my workspace for you, getting rid of that pair trade that we did earlier in the year with BYD. But it is down almost 8% there on all sessions after having quite an interesting Tuesday as well. Just a reminder, trader friends, of what happened in the previous session. We saw a bit of a shakeout. This is the hourly chart here, a bit of a shakeout there on the previous session. And on Mondays as well. Tuesday's shakeout there coming after Musk made some negative comments about that big, beautiful bill. Elsewhere, taking a look at Wizz Air, because many of you have mentioned this earlier. Look at this chart here. whack up. There we go, the daily chart. Look at that 23% dump there on that stock this session, and that is quite painful. That's on the outlook, and also many of you chiming in earlier about the delays as well that we saw. I'm just going to read that out for you because you can find that on our news space. Top loser on the FTSE mid-cap after the annual profit miss, which fell short of analyst expectations. Full year operating profit, £167.5 million, and the company says it will not provide an outlook for 2026. So that's the latest on Wizz Air. Now, I hear you asking, where is that BTC, Ange, right? Bitcoin, here we are. I'm going to put that up for you. Monkey Man, how was your exercise this morning? I was watching out for you because last few days, I've noticed you've been a bit late. Now, Bitcoin, really interesting here because from a technical viewpoint, this to me looks like it doesn't really know where it wants to go yet. It is in a range, and we continue to hang above that 102 level, which is a level of interest there. Of course, the 105, this is the daily chart for you, the daily chart. It's currently around just under 105 there. That area is halfway between the psychologically crucial area of 100,000 and also 110,000, right? That previous to this, you know, that was kind of like the key area that everyone was watching. I want to also say, I'm just going to put on for you a moving average. And I'm going to choose an exponential moving average. Actually, I'm just going to choose a moving, well, here we are, we've got exponential moving average there. The 50-day, which is the blue line there, this currently, we're seeing the price action above that. And also crossing that 20-day level. So this makes it even more interesting because, you know, this tells me the chart price action has two potential possibilities, right? So what we can say, trader friends and Monkey Man, is that just, you know, from what we've seen the last few days, that short-term pullbacks continue to attract viewers. And the reason I can say this is because look at these green candles on the way up the stairs. We often say that shares go up the stairs and take the lift down, so be careful. But in this case, can you see that we're seeing more green candles on the way up than red? So green candles there and more green candles there. So just bear that in mind if you are trading Bitcoin. For more questions, do let me know, and slam the like and subscribe button, trader friends. Slam the like and subscribe button because, you know, and let us know what you'd like us to look at because, you know, we are here to help. This is a wonderful community, and you know, this is what we're here for. I heard someone say earlier, Ange, can you have a look at Rios? Here we are. Rio Tinto pretty much flat at the moment. I'm going to take off that moving average for now. And I'm going to just make that clean for you so that you can see a bit better. Here we are. And this is the daily chart, trader friends. Taking a look at the moving averages first. So here we are. Let's have a look at bunging up the moving averages for you. And on the daily chart, you can see that, whack up my chart, people. Can you see it here? Yeah. The stock is trading around that 4,350 level. Now, this is currently below the 20. It's below the 50-day moving average and also the 100-day moving average. And this suggests bearish momentum going forward. It also should highlight to you that, you know, you do need to put on your gloves if you're looking at new long positions. Now, there some ways to play this. If you want to look at a breakout play, if the price breaks out of the 50 or breaks out of the 20, then with strong volume, might I add, because you should never ever trade technicals in isolation. So what I'm looking out for here is strong volume as well. So I'm circling with my cursor where I would look, right, if there's a breakout. If we see strong volume, then this could mean a trend reversal and a buying opportunity to perhaps get us back to that 200-day moving average. But that is on the proviso that you have strong volume. Now, just very quickly, if the stock fails to hold support and falls below the 4,000, around the 4,000 level here, and it falls below that, then that is a confirmation of more bearishness ahead. Right, we got Aaron Bright coming up next. So, any questions for Aaron? Lots of he's the macro man. Please slam them here. We'll get them asked, and hit the like and subscribe button too. Stay right there.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends, welcome back with me and Aaron Bright from IG Smart Portfolios. Welcome to the show.
Thank you very much. Good to have you back from Italy.
Oh my goodness, it's it's good to be back, but I do miss the sunshine, and I do miss the good food.
The Aperols.
The Aperols. I didn't actually get to have Aperols, but that's okay. That's okay. Speaking of which, you've been holding the fort, and I came back. First thing I did was check the bond printout, or rather bond markets. Not the James Bond, but more exciting than that, it is this one. And we are seeing the longer end starting to creep up again.
We are indeed. And I think there's quite a few reasons for that. I mean, different portfolio managers will give different reasons on the bond market, but I think from my perspective and from what I've discussed with others, there's quite a few at play. I mean, there's certainly the risk of inflation that we've seen from tariffs. Bear in mind the tariff story changes pretty much on a daily or even hourly basis these days, with reprieves, with extensions of tariff delays. But if tariffs do come into force, it's likely to cause expected inflation through rising cost of production. So investors are demanding a higher yield, which is understandable when you've got a fixed income paying asset. Also concerns over the sustainability of the US debt. We saw Elon Musk tweet something the other day, I think it was a couple of days ago, sort of complaining about the size of the debt repayments that the US is undertaking. And obviously they've recently passed this very sort of interesting bill, which
he called it a disgusting abomination.
Yes.
I think were the words.
He doesn't mince his words.
Kill the bill.
Yeah, exactly. So it's just really interesting to see that, with that going up, with the US government increasing spending, their debt burden's obviously going up, and investors will have concerns about their credit rating, their creditability. It's like, lending money to a friend who's now got more and more debt. That's the way, a good way to look at it. The concerns of paying it back will, increase a little bit. So that's why investors are demanding a high yield, because they are, in theory, taking on more risk. Really interesting development, the bond market. And it's, something that investors are certainly keeping a close eye on as things develop throughout the year.
Do you think Trump can get away with it as long as stock markets continue to trickle higher? Do you think that's his view?
Well, I think Trump's platform, and the reason why he got elected for many people, was, from a business angle, was deregulation of certain industries. And, also he wants to sort of empower sort of the Rust Belt and certain parts of America which have felt lost. This whole "Make America Great Again" rhetoric was on the basis that, jobs have been lost overseas. He wants to bring it back to America. So I think that's, obviously his key part of his policy. And as long as he's sort of achieving those goals, and, the macro data is good, and absolutely the stock market, Wall Street has a huge sway in political influence and political power, as we saw with the city, with Liz Truss. We saw a real tantrum there. So it's certainly a bit of a balancing act, a little bit of a Game of Thrones sort of scenario. Not quite as violent, but there's a lot of stakeholders at play which all need to sort of achieve their goals, really, and to ensure that nothing becomes too unsustainable.
What's interesting too, I'm glad you brought up that Game of Thrones metaphor. It's, he's got many spiders, hasn't he? He's got many. What are they? Crows? No.
Yeah, are you talking about the spies in Game of Thrones?
Yes.
Varys. Yeah.
Yes, Varys, and he has these
the
birds.
birds.
There you go. Yeah. Everyone mentioning how smart you look today.
Thank you.
Even the producer Phil on the train is saying that no gilets. Gilets got banned here because of that wonderful rustly sound.
Yes.
My gilet got banned too.
Yeah, it's a shame. I mean, I'm a big fan of gilets, but I have to revamp my wardrobe, buy some gilets which don't have such a rustly material on the front. But
it's really hard given it's all parachute material.
Yeah, absolutely.
Non-farm payrolls. That's the big thing. Other than Broadcom, for those of you who are trading Avigo. But let's talk about non-farms first, because the report for May looks like it's going to rise by circa 126k to 130k. That's the most recent print that I've seen. Do you think this is on the money, or above or below expectations? Below the bright expectation?
Yeah, I mean, non-farm payroll is really interesting. We've seen sort of quite contradictory data coming out of the US. Sometimes we've seen slightly weaker data, slightly stronger data. I wouldn't be surprised if it comes up a little bit short this time. We've seen a figure of 177, I think, last month. We're now going to see an alleged figure of 120. It's still not a good sign to see, job job additions falling down. But yeah, I think the US economy is a really interesting one. We've been in a situation for a couple of years now where people have said recession's imminent, recession's imminent. We've had all this warning signs. We've had the Psalms rule triggered. We've had the inverted 210 spread in the yield curve. We've had all the warning signs where portfolio managers, investment strategists around the world have been sort of bracing themselves for.
And yet
It's still you know, it continues to do quite well, relatively well.
Yeah, which brings me to the point where I think, you know, we haven't seen this end of exceptionalism, but it's more so the start of diversification, but not the end of US exceptionalism. What do you think of that?
Well, absolutely. I mean, for the past couple of years, you actually, I mean, obviously you always need to be diversified from sort of a portfolio management perspective, but last couple of years you were actually, relatively speaking, punished because the US produced, the S&P 500 produced 2 years of 20% gains. So, you know, where we saw the FTSE and certain segments of the European stock market, with the exception of the DAX, emerging market, those areas not perform as well. So in the equity sleeve of your portfolio, you're actually rewarded for not being diversified, which is quite a conundrum for the multi-asset investor who wants to ensure a risk-adjusted return. Yeah, I mean, I certainly think that exceptionalism has had its struggles this year, but you know, the US economy is probably having, and the US exceptionalism argument is probably having a little bit of an adjustment, I would say.
Should this is from your, you know, smart portfolio perspective as well. Should investors, you know, with their pensions, not dipping out and chop and change, but rather sort of ride it out? We often talk about riding out these blips, right? In the longer, you know, longer time frame. But looking at the FTSE here, and you know, perhaps many of the indices, just whacking this up for you. You know, we did see that, you know, that obviously the tantrum back in April. Turmoil, and then you know, those that did buy the dip, happy days for them, right?
Yeah.
They are now laughing. Look, it's gone back up.
Those who took Trump's advice, which was you know, a tweet in all caps saying now's a great buying opportunity, which was interesting timing.
And look, Germany having the same sort of bounce there. In fact, Germany,
it's the V-shaped recovery. That's what it's called, when the market sort of, we saw the same during COVID when you get quite an intense sell-off, albeit this one was nowhere near as bad as sort of the 30% corrections we saw in you know, bear markets we saw in COVID, but still very painful, particularly if you put a large chunk of money in the top. A strong recovery we've seen. It's
very strong. And also this, looking at the DAX here, for those that look at technicals like me, I mean, this looks like if all these green candles here were red, it looks a bit like a J hook. Are you familiar with the J hook?
I'm not, no.
It's when it looks like a J but a sideways hook, and if these are all red, it shows you that there's been a lot of, you know, selling, and then suddenly it hooks up, and you know that the bulls are
back.
Yeah, the party's back on. It goes zoom up that way, and which is kind of, if I, you know, try and widen it out for you, kind of looks a bit like that. For those of you that like the J hook pattern, please put it in the chat. I'd love to know if you look out for this like me, and also slam the like and subscribe button. If you hit the like and subscribe button.
Yes, I have.
Oh, good. Our Saxena saying that you hold Rio because of the dividends. Yes, I do too. It is decent. Off the top of my head, I think it's about 7.
Yes, I actually remember, I think this was 2022 when there was quite a sharp sell-off in equities. I remember chatting to my great uncle, and I think he received a 14% yield at one point. So he was very chuffed.
Yeah, so here we are. Very decent. 7% there. But time and time again, this is, you know, why we see people hold these stocks, right?
Absolutely. You know, yielding 7% is very attractive, and you know, I guess the only caveat to this argument would be that, you know, if you sort of dabble into the gilt market or some of the bond market, you're getting 4%. You are taking equity-like risk in this. These yields are more attractive when bonds are yielding lower, but still really attractive. You know, and you've got certainly a premium given the fact that you are, investing in an equity-like security. Well, an equity actually.
Yeah, and let us know, trader friends, whether you reinvest or you take out the dividend and put it somewhere else, or do you just straight reinvest? Mango, just want to say thank you again if you didn't hear me the other day, but thank you for the gift that you passed to Rich to pass to me here. He and his wife apparently do this 3D printing. It's fantastic,
wow.
isn't it?
Yeah, that's from a printer.
Unbelievable. It's so well made, but thank you very much. I have it right here by the desk, and it keeps me company when Aaron and Rich are not here. Right, let's have a look at some of the other stocks that our trader friends have asked us today about today. Broadcom, do you like Broadcom?
Yeah, it's an interesting company. As I've said quite a few times on the channel, we don't allocate to specific stocks in our portfolios. We take quite a broad view of on the indices level, but stocks like that are obviously very important constituents of the index. And yeah, their performance will obviously aid or damage the smart portfolios depending on which period you're looking at. But certainly an interesting company.
Now, the reason why I ask about Broadcom is because I'm going to try and get to it. Just come off my chart for a second, because we have got earnings out from Broadcom a bit later today, and also what's interesting about Broadcom is its chart. But whilst I'm whacking this up, the other reason why I bring this up as well, I mean, it's very strong upward trajectory there. The reason for this as well is because, Broadcom's gaining, AMD's gaining. We saw strong support from the likes of Hewlett-Packard Enterprise after strong earnings due to AI server demand. Let's check in on NVIDIA as well, because that drives the AI heart, as it were, but also, looking higher there, just taking out these technicals there that I draw for myself. But, it's interesting to see that, tech stocks still very much, giving indices the support there. Do you think that we're going to continue to see this going forward in the second half of the year?
Yeah, I mean, I think it really depends on the equity market story in general. These stocks, when there's a change in sentiment, can experience quite significant volatility. So I think if we get a change in the scenario, or tariffs come into force, or we see any negative sentiment going to market, then yes, this might not continue. But if positive sentiment is continues, or we get an increase in positive sentiment, this could certainly continue. But also the state of the US economy, I think, is going to continue to come into question, and that will also come into question whether or not tariffs are cancelled or increased. Who knows what happens to tariffs? It's something which I think is going to be under every investor's microscope.
Yeah, it's almost as if everyone's kind of on tenterhooks when they wake up to check to see what's happened overnight, because that's kind of the world we live in now, right?
A post recently, I think it was when the whole tariff story broke, and Trump did the Liberation Day, and it said that they called Joe Biden Sleepy Joe because you could sleep at night with regards to your portfolio. So.
I love the people that come up with these terms, and taco as well.
Yes, Trump always chickens out.
S&P 500, just very quickly, around 3% below, highs seen. Let's wake that up for you, so that it's easier for us to see. This is the daily chart here, and we did see highs, in February, but we're now kind of 3% below these highs, despite those recent gains.
I think it's still quite astonishing how near we are.
Yeah.
Given the
rate of the bounce back, right?
Yeah, absolutely. I mean, to be honest, we have become somewhat accustomed to these rapid sell-offs and rapid recoveries, but every time it happens, I'm still surprised. I mean, you know, COVID, we obviously had this. We had this with the sort of Credit Suisse debacle, the Silicon Valley Bank debacle. We had it last year, or 2023, a little bit in November. We saw a bit of a sell-off and a quick recovery, and we've seen it again now. Interesting to understand why that's the case. And I think there's elements of the fact that, you know, we've seen a much larger participation of the retail trader, you know, potentially buying dips.
And we just looking at my cursor there, that looks like it could be a retest there. And it's tried twice. It's broken above that 5950 level. And a break above that could see it going to 6040. And then after that, perhaps back to those February highs again. But it all depends on momentum and, of course, keeping an eye on volumes.
I think given how sour the mood was at the trough of that figure, of that chart you see there. I mean, no one really would have estimated that we were going to get such a rapid recovery. It felt like we could get into correction territory. We weren't quite there, into bear market territory. We weren't quite there yet, but, you know, I spoke to strategists at different companies, and some were saying, we think there could be a bear market. Others were saying there's no chance of the bear market. But I think that the consensus was expect volatility to continue, and we've obviously got volatility, but volatility very much on the upside, which I think has surprised many people, given the sentiment, given the macro data, given everything going on in the world.
100%. Right. We are going to go to a quick break, but don't go away because Jolie Lepselter is going to be right here with me, and we are going to talk about options strategies alongside technicals as well. So all your questions, hit that like and subscribe button, slam them here right now. Jolie's coming up next.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome back. And it's myself and Julie Letzelter here to talk about trader tools. Tesla being the first one because we have so many dates coming out.
Sure.
Yeah. Robotaxi service testing in Texas, Austin, June the 12th.
Yeah.
You
And
didn't?
I'm from Texas. So, I mean, originally, yeah. No, I haven't been in one of those cars that just self-drives. No human being aside from yourself, but
Really? I hear they're all over the place, being tested.
Yeah, I would love to go in
especially
one.
Like San Francisco, places in China. They've got, what is it? Something Go. And I've been in one in a
really?
car show.
How was that?
It was a bit scary because the thing is, you see this thing driving and it has the steering wheel covered by this plastic thing, so no one can lunge at it and create an accident, right?
Yeah.
Imagine stag do or hen do,
Yeah.
right in the back. And
Yeah.
then, but what I find most fascinating is it's listening to you. Yeah. So as you're kind of talking about, oh well, I really need to go to the toilet, it then tells you there is a toilet in the next service station.
Yeah.
In 10 kilometers or 5 kilometers, or when you pull into a service station, it can tell you, I hear you're hungry, Julie.
Yeah. Do you need a snack?
Yeah.
There's a Tesco Express that way.
Yeah. Well, look at her. She's Tesco Express already. She's like local. She's part of the London crowd.
I'm trying. But yeah, how interesting. I would imagine it could be very, very helpful, but then you also have to be careful.
Yeah.
If you're just chatting on the phone with your friend, don't want them to know everything.
Yeah.
I don't know.
Yeah. And then it is looking from the not too distant future to execute its first fully autonomous, I'm not going to believe it until I see it, delivery of a Model Y. So I know I have lots of friends with Model Ys, but this is be the first delivery of an autonomous one.
I see.
Should be incredible. Likely to be in your hometown.
Yeah, or close by. Yeah, not
Austin.
too far. Not
Yeah.
too far. Yeah. That's amazing. I can't wait to see more. But I'm sure, Tesla's always controversial, always very volatile. So I'm sure there's people who are like, wow, what an amazing invention. And there's people like, ugh, Elon, not another robo-car. It's all always up and down.
So I have this Tesla chart here, and I'm going to tell you the levels I'm looking at.
Sure.
And then I'd love to see an option strategy, so that I have our viewers have another option. So looking at key resistance levels at around the 352 bucks, which is around the area of interest. I'm going to draw it out for you. Here we go, around the 352 area, around there.
Nice.
And what I'm looking for is that, this ties in very nicely with the 50% retracement level. I know that's not a fib for those of you who are Fibonacci fans, but it is still something that we look out for. The recent swing high was around the 362 mark. So looking to see whether we see Tesla start to move back towards that area of interest, or if we fail to get above the 335 level, then perhaps we could then go further down.
Sure. Sure. Yeah. For options, a couple different things we could do here. It depends.
Tell us.
Yes. So we're like going. In this scenario, I would be somebody who has a bullish look on Tesla. There's so much going on, and this is just me, like generally speaking, playing a role of somebody who is bullish.
Does Jolie know something we don't?
No. But I'm just saying there's obviously like so much going on in the month of June for Tesla. So a couple different things. So if we wanted to practice a short strategy, because we know from Mr. Tom Sosnoff that when you sell an option, it's got a higher probability of profit than if you buy an option. So if we wanted to be a bit more clever in that regard, we could theoretically sell a put option in June. So we've got some stuff coming up all throughout June, it looks like. So say, there's some stuff coming out June 12th. Here we go have June 13th. We could theoretically sell a put option for what we think it would, climb to. Right now it's kind of at a lower point, right? We've seen that like 350 is kind of a median here, and there's like some room to grow. So say we thought things were going to go up, we wanted to sell a put option at 350. Here, we would get a nice little credit coming in. Again, just as a disclaimer, the U.S. options, the listed options market is not open, so these prices are not going to move. So say we wanted to sell this guy, and we would get the nice little $23.95 should we get filled at that price. You do have to uphold a lot of capital because, again, shorting a single-legged option, risky strategy. You need a margin account. But if for any reason, right, it keeps on climbing up, we think it's going to go to like 375. If the other side of that option, right, the long option holder, they're not going to get any value from selling at 350 if Tesla's trading at 355, right? They could just sell it out in the market for a better value. So in doing this, you could get your credit, and theoretically, it could just expire out of the money, and you could keep all of your credit. That would be one scenario, right? The shorting aspect of things, I'm going to remove this leg. Say we are a little less risky. We don't even want, to short, but we still have the same sentiment. We could buy a call option. So say, hey, I think this thing's about to shoot up to 355. Let me buy a call option at 350. So I'm going to get a better value when it shoots up to 355. I can buy it for a steal at 350. And you could either choose to take delivery if you have enough capital on hand, or you could just simply sell the option before expiration and make a profit, because at that time it would be in the money, it would be more valuable.
Yeah.
Boom, boom.
I like that.
Yeah.
Angela's all about the safer option. I like that less risky strategy.
Too.
Great. So that's fantastic stuff. 2 ways to trade this straight away for all you guys out there and all you girls as well. Broadcom. Let's have a look at Broadcom, because we are counting down to Broadcom's earnings as we speak, having a look at the chart there. Very strong upward trend there. And also what's key here is to see how many green candles we've had recently. This tells you that the bulls are in control, right?
Sure.
They've been rallying strongly into earnings, hitting, let's have a look. These are real highs there. Having a look at the weekly and also the monthly. I always do this to make sure I haven't missed anything. So, we are like record highs, just below that high seen, $265, I think it was. And very strong upward trend there. Some key support and resistance levels. Every time I say this to my husband, he thinks I'm crazy, because I talk a lot about support and resistance.
Right, yeah.
Is around that 256, showing you that hourly chart here, because that will be easier for you to spot. So 256 there. This would be the area of interest for me. Putting the rectangle Oh, not the rectangle. That was not the rectangle. Sorry.
No.
Looking.
Drawing's hard.
It is very hard, isn't it? Especially when you're talking at the same time.
Virtual, manual, whatever kind of drawing you're doing is hard.
Yeah, so here we are. That's the area of interest. And this is an area that if you see it get close to that rectangle, it might bounce back, in which case it means further upside. But if it crosses this area and falls below, then we could then see, downside towards perhaps the next area of interest, which is around the 249 level. What is your play on this on the options side of things?
Well, just so we can get a different point of view than Tesla, right? The earnings are coming out today, probably after the U.S. market close regular session is what I'd anticipate. I'm not sure. It could come out earlier in the day. But anyways, looks like people have already kind of taken their picks on where they think this bad boy is going to go. So say I am a different trader with a different sentiment than Tesla. I think this guy may be overvalued and perhaps it already hit its peak. If that were the case, I would say, oof, let me go ahead and protect those shares I just bought, right? I want to go ahead and sell them, make sure that I have protection and can sell them at a profit, right? So say with AVGO, today is the 5th. I just bought some shares. I think these guys are about to do a deep dive. Expirations tomorrow. I just want to get rid of them because I don't know what's going to happen. I'm nervous, right? We could theoretically buy a put option. So, that would give us the right to sell at a specific price. We're going to pay a debit, but we're hoping that that's going to protect our shares and lock us in a profit in the long run. So say I bought yesterday at like 257, right? I want to sell higher than that. I don't want to put down too much capital, so I can buy a 260 put, which would allow me to sell at 260. Or if I decided, you know what? I want to hold on to these a little bit longer. I could also seek to just sell the option, and if it's in the money, it's going to be more profitable than when I bought it, most likely. I will say there's not a whole lot of time value left, so options will be there's less time for a move to make with such a short time frame here. But it's definitely something to consider.
Right,
and it's
the
definitely
decay.
it's definitely something baked into the pricing. So because we've only got like 1 day left, right? There's not a whole lot of time decay left, not a whole lot of time for it to make a big move. So that should bring down the price. But then again, may not work in our favor. So that's one option. Option number 2 is I'm just going to remove this leg. Option number 2, if we want to go on the flip side, we want to sell something. Instead, we want to get that cash up front, and then hopefully it's either out of the money and we get to keep that little small profit, or we get to sell it, where we still have to deliver those shares, sell those shares to the option buyer. But we have autonomy. We can pick our strike. So we get to pick. So even if they do get called away, we know exactly that strike. So say we want to sell. In this example, we said we bought at 255. We could sell this guy 257.5, right? We'd get a credit here. We know this is, again, a riskier strategy, but this is another way to capture a different sentiment on a different stock.
I love this, Julie. And what this ties in with as well, both your strategies there, is that I've just whacked up whilst listening to you a momentum indicator, the RSI here.
Sure.
And you were saying that maybe you think that this guy's got a bit too toppy now, and maybe the earnings means there's going to be a pullback. Well, this, and I'm going to put the oval function here so that it's easier for you to see, suggests that we could potentially have some sort of a pullback short term, because the RSI is currently overbought, or indicating it's in overbought territory, right? And also, of course, it's had such a run higher.
Yeah, it's pretty impressive.
Right?
Yeah, leading up to the earnings.
Hims and hers. I hear Monkey Man piping up. Monkey Man is a loyal viewer of ours. Also,
Sure.
One of our clients. Let's have a look at Hims and Hers. This is the company that sells all sorts of things, including therapies and services. I noticed in the US, there are adverts all over the place.
All over the place, everywhere.
Super
Social
Bowl,
media, Super Bowl,
advert.
yeah, wherever you go.
How prevalent is it? Like, do you know loads of people that use their products?
I wouldn't say no loads of people who use them, but I think telehealth in general is like just a big deal right now. I think people would prefer to interact with humans as little as possible, unfortunately. But they also want to. It's competitive getting a doctor's appointment, at least in Chicago.
It is very competitive.
So it's hard. It's hard, and this is kind of a way to skirt around that. Of course, you know, there's certain scenarios where people are going to want to see somebody in person. But if you're like, hey, this isn't serious, I just need something like right away. Yeah, definitely a big deal. I will say there's other competitors, but the marketing does stand out. It's definitely got like a catchy name, kind of a distinct point of view, as opposed to something a bit smaller, which does not market as hard.
Jugger saying, Monkey Man, you are being used. Aren't we all being used? I love it.
Yeah.
Speaking of which, hims and hers, you know, I also very much like their marketing positioning. You know, the Super Bowl advert, they kind of try to portray themselves as like the telehealth medicine, the cheaper option to the man or woman on the street.
Sure.
As opposed to those people who can only afford those skinny pens. But having a look at the moving averages, right? So the way to do this, the easiest way, is just go there and then whack the moving average up. I'm sure all our trader friends are very familiar with this, but some of you who are not familiar, you know, message me and say, and where can I find this button? There you are. You can also change it on the left-hand side. If you wanted, for example, some people use, you know, 200. You can easily change that there. So you get 200 and hit apply and so forth.
Yeah.
And at the moment, looking at the moving averages, what we're seeing here is that the price action is still overall signaling a bullish trend. However, we are starting to move across into the 50-day moving average.
Right.
We've got this very interesting, I know our trader friends have interest in candlesticks as well. For those of you who haven't checked it out, on the shorts page on YouTube, I have been doing a very brief 101 candlestick technical analysis shorts, and there are, I think, 5 of them now, so you can watch them very quickly. And I try and make it as simple as possible. See these two almost like inverted hammers there.
Yeah.
And that kind of shows the story behind that is, you know, there was buying, but then the bulls failed to stay in control and it tried again and failed to stay in control. And you see the body of the candlestick move lower.
Yeah, it's interesting too, because when you were looking at the wider chart, I'm noticing that it's been rallying pretty well within 2025, it looks like, but it doesn't look like it's at its all-time high, which is pretty interesting. Yeah, especially as we see more marketing, we see it kind of everywhere. It seems like it's, you know, done a lot of business, so it's quite interesting that it hasn't reached its all-time high.
Yeah. And key support levels, I always put this on just so that it's easy for me to see. Around that 61 level is where I'm looking at, and also that 59 level, because, you know, we've had a lot of action in between there, despite it trying to break through.
Sure.
And failure to do so means further downside in the short term. What's your call on the option side?
On the option side, I would say, you know, just based off of what we're seeing, there are 2 different sentiments, right? Aren't there always a bull, a bear? So
That's what makes a market.
Yeah, exactly. So say in this scenario, I am going to take the opposite side. I say, hey, they haven't reached their all-time high yet. Forget about them. And then also, these Europeans, they're not going to want to use hymns. They're going to want to use what they know. So say I think that it's just going to plummet. They've spent too much on marketing, whatnot. I could do pretty similar strategy to what we just discussed with AVGO. But say I think, you know what, actually, I'm gonna take that back. Say I'm pretty neutral. Say I'm pretty neutral. In this instance, I could theoretically sell a call option, thinking that it's just gonna kind of like stay around where it is, so that I could, you know, and say because I'm neutral, I'm looking at something that's going to expire tomorrow with not a whole lot of time value yet left. So if I think this guy is just going to stay where it is, I could sell a call option, get my nice little credit, and just sit back, wait, hope it's not in the money, and then just let it expire or buy it back for super cheap.
Nice.
Yeah. So that would be one way to go about that. Yeah, I would say if you are neutral, it may not be of your best interest to go long on an option, especially something that's going to expire pretty soon, because we know that time decay is not working in our favor. Potentially, we could buy something further down the line, like a July option, and we think HIMS is going to stay around. Same strike here. We could theoretically buy something pretty close with that time value attached, and then if it does make a move, you know, within the next 2 months here, like we think we're neutral, but maybe it may move up a little bit. We're going to buy something with some time value, and if there is a big move that makes, go ahead and sell it when it reaches the price that you'd like.
Nice.
That's another option.
Yeah, I like that. I like that. A longer term view. Let's take a look at the chat as well, because we've got quite a few people saying thanks so much for showing us all these different strategies. Arsak saying, Ange, can you look at my question? Rubric. Please, can you look at Rubric for today's earnings? For those of you looking at Rubric, it's a cloud data management firm and data security company as well. And the software can be used both on premises and in the cloud. Wonder if I can quickly whack that up for you. Taking a look at Rubric, and Arsak's also saying but HIMS has bought a European telehealth this week. I think you're right. It's called Zaha?
Yeah.
So yeah, that is, here we are, Rubric there. I'm going to take off the moving averages for now, just to make it a bit cleaner. But a Rubric has got a clear upward trend as well. I like that chart, Arsax. Lots of green candles, but bear in mind, buyer beware. There is a doji here, which is on the daily chart. Just be aware of that if you're trading the short term, because a doji means that the buyers and the sellers are both in equal they're both pushing the same way, so indecision, right, which could be a pivot point. So what I would say about Rubric is overall upward bullish trend, and we are seeing a triple bottom there, and it has actually obeyed the triple bottom. I like that when it obeys the rule. And what happens is, to explain this to someone, is that you had selling and then it hit that resistance. People came back in.
Yeah, they're like, hey, it's my time to get in.
Yeah. And then you sort of fall again and more people join the party and go, okay, I'm going to get back in again because this is my second chance. And then the third time, when the rest of the party joins in, you then see this big push.
Yep, look at that.
Yeah. So I like it when it obeys the rules.
Although right now, not too sure.
Yeah, if you're
a little fight going on.
You have a bit of a fight. And on that note, thank you so much for being with us. Hit that like and subscribe button if you like those handy strategies. And also let us know what you want Jolie and I to look at the next time round, because we're here for you, trader friends. We're here to help you trade better and to hold your hand through this. You are not alone. You have us here, and Rich as well. So do slam the like and subscribe button and email me at ask@ig for more trading ideas and strategies.